So good evening to everyone once again. This is the 6th of Jan 2024, Saturday evening, the usual masterclass session. We're going to take a look at the Nifty, Bank Nifty, broader markets, sectoral indices, create a strategy for the next week. Then as always, we will update the stop losses, the positions that we have added to our sheet that we are maintaining. And then we'll take a look at fresh opportunities for next week. Starting off with Nifty, I have 4 different time frames here, starting from the largest, monthly, weekly, daily, 75. It's a toggle between 75, 125. 125 more from actual trading point of view, and 75 I would say more from analytical point of view, because the monthly all the way down to weekly, daily 75 is a nice close enough factor of 5. So weekly, beautiful Heiken-Ashi, not much of a lower shadow at all. The momentum readings are also fairly well placed. Moving averages also are holding well. We did manage to see a bit of a slowdown last week with these 2 days, which the index has managed to bounce back. Now, I would spend a little bit more time on the daily chart, but talking about the weekly, there's nothing much to talk about apart from the fact that the trend, the momentum is all intact. Range is contracting. Yes, the indicators of any time frame will give you stretched overbought conditions, but the price is not matching up to those overbought conditions. Price is not showing any signs of slowdown. It's the daily chart which is a little bit more important. So in the daily, you can notice that I have kind of marked this rising channel kind of a formation. The interesting thing is, all the way from this point up here, then up here, I have clear-cut structural divergences shaping up on the flow indicator. And of course, they also offer me positive hidden divergences. That's what's leading to these bounce backs. So momentum reading is still not positive. What it means is the market is showing strength. The market is not coming down, but the market is not moving up at the rate at which it was moving up earlier. So it's not going to be an easy ride for the bulls. We have the structural divergences in place like these, but we also need to understand that these structural divergences are signs of slowdown. The structural divergences needs to get supported by follow through weakness in price. Well, follow through weakness in price in our recent past has come only twice, in the shape of what we call as a red HAGB following by a good looking hike. And in fact, if you take a look at 20th December and 21st December and compare it with 2nd Jan and 3rd Jan, I'm talking about these 2 red bars and these 2 red bars. By its inherent price behavior, they were very similar. The difference was in the range. The one in December actually behaved in a very wide range. The one in Jan, as of now, the range has been much shorter. But it's just a weakness which lasted for just 2 days. And in both the cases, you will notice that they found support from its erstwhile highs. This low matched with this high. The current low of Wednesday matches with these erstwhile highs. So technically, structurally, the prices are in an uptrend. Momentum is slowing down. Supports are holding well. There is not enough sign of price weakness to confirm that the momentum will drag the market down. Price is God, price is ultimate, so we wait. The window of opportunity for some meaningful fall was Thursday's close. After Thursday's close, I did share on my the daily prep sheet, which I shared with you, that Thursday's low and high is going to be very crucial on Friday, especially Thursday's low. Well, Friday was a positive day. It went above Thursday's high. It closed above Thursday's high. So far so good. It's got a lower shadow, it's got an upper shadow, but it's a positive day. It's a good looking day for the Nifty. So bottom line, Trend is strong. Momentum is still slowing down. It's going to stay choppy on both the sides of the market, and we need to be a little careful in selecting which stocks or sectors we want to go long or short. In terms of levels, it's very obvious that Wednesday's low is extremely important. Thursday's low is not as important as it was earlier on Friday's trade, but I think going forward now it is Wednesday's low from the point of view of downside. From the point of view of upsides in an all-time high market, it's very difficult to figure out how much it can expand or extend. It does. So we have to keep an eye on breakout failures. So look at situations where previous highs gets broken and it slips immediately. That will be the sign of the top. I repeat, you need to keep an eye on stocks or sectors and the Nifty, Bank Nifty. When it goes to new highs and breaks with a lot of enthusiasm and positive sentiment, if it slips immediately the very next day, within the next 1 to 2 days, that will mark as the top, as at least the short-term top in place. We don't have any such situation right now, so it's meaningful, it's prudent to be comfortably bullish. 75-minute time frame, I'll not go into it. It is essentially this particular last bar's range which will decide the movement for Monday, but then that will take up in our Monday morning's session. CNX 500 is also holding really well. Now, I did mention this in one of our live classes recently that I am getting this feeling, and I'm getting this clear signs from the market of a lot of rising wedge kind of a formation in this current market juncture. Now, those who have been associated with me for many months or years would know that I have a past with this kind of a formation. I have repeatedly shared this with you that the 2007 top, which led to the vicious 2008 bear market, came from a formation exactly like this. And that was my first meaningful rising wedge ending diagonal kind of a formation pattern, which led to the very first bear market of my career. So every time I see this pattern, it brings me those memories back, and I tend to look for the breakdowns. It's very natural. Do they come always? No, but if they come and when they come, they are vicious. So 500 also forming like that. 500 also will show you proper, distinct structural divergences. Let's understand. It's a strong market. It's a bullish market. There are signs that it should slow down. It's just not slowing down. That's where we stand. It's a matter of time now. But it's the mid cap and the small cap which is crazy. Especially mid cap. Picked up again another leg of fantastic momentum on the upside. Bullish. There's not much scope to talk about these guys apart from the fact that they're still strong. Momentum is still intact. Divergence do not take the price down. Divergences are failing to take the price down. And the party just continues. But the meaningful sectors now. Bank Nifty. If you remember last week we were discussing that the Bank Nifty can slow down, and that was primarily based on some structural divergences, some proper red HAGBs that we were finding on our Heiken-Ashi chart. And so we said that this week, the next week, if you see any weakness, it might come from the banking. And it did come from the banking. And so did the bounce back. Where do we stand now? Weekly is as good as the one that we've seen on the weekly chart of Nifty. Do we have a structural divergence in place? Yes, we do. Do you have some bit of a sign of slowdown? Yes, we do. And then we have a bounce back. Now, for the Bank Nifty, Thursday's high-low range was as important as that of Nifty. Bank Nifty did go above Thursday's high, but it slipped. So I cannot completely negate the possibility. I cannot. Again, the momentum indicators are very clean. So it will be interesting. I think going forward, it will be interesting to see whether Bank Nifty takes out the low or the high. Trend is slowly improving based on the short-term moving averages which we are using. We have a positive hidden divergences kicking in here. So I think it's going to stay range bound to slightly positive. But if IFF. If you see Friday's low and even Thursday's low getting compromised early next week, if this happens, then I think you should start looking for shorting opportunities in this particular pocket. If it doesn't come, if it holds above Thursday's high, then expect selective stocks to perform well, especially in the PSU pack. Finance will give you a similar kind of a feel, but finance is relatively better. All financial stocks have been doing well. And over here also you will find, if I draw, and this time I'm going to use the trading view tools to draw so that they stay when we discuss about these sectors next week. You can see some bit of a ascending triangular formation here, complete drop of momentum. Let's see which way it opens up. An upside breakout is very natural. Let's come to auto. We had a great breakout. Okay. Let's actually, as we do these sessions, it actually makes sense that I keep them marked. It will always help us later on in our discussion. So nice breakout, sustained well. Weekly very strong, no signs of worry from the weekly chart. Most of them have a very short-term divergence with the RSI that I have here, but we should not pay too much attention to it right now. Fine, I think cautiously bullish is the right approach. Momentum, short-term momentum is slowing down. We can see this. Which way will it open? We'll see. But I think it will be cautiously bullish. Choppiness is likely to stay. Recently, we had a negative Heiken, which was on Wednesday. So Wednesday's low will play an important role. Wednesday's low also resonates with the previous high. So if you want, I can kind of make it a little thicker. And because it's support essentially, we'll use blue. There you go. Let's keep it marked. So cautiously bullish. Consumer durables holding really well after the breakout it gave to an all-time high. Weekly charts all well placed. Nothing much to comment about this. Not signs of any negative divergence with the short-term RSI. Clean, going up. It can slow down. It did slow down a couple of times with just a couple of red Heikens. This thing we need to be careful. Recently, you must have noticed that when the market's slowing down, the extent of the slowdown, the extent of the short-term correction, it might be lasting for just a day or two, but it's expanding the range. It seems like the market is kind of a hurry to come down and then bounce back again. Strong demand on the downside. Consumer durables, bullish. There's nothing much to state at this juncture. Energy. Now, for the energy also, I've been marking this and would like to really see how long the index stays within such a steep pattern. You see, what happens is, I'm not going to go too much into the theoretical part, but what I'm trying to explain is, if you see this rally and this rally, fundamentally they're different. Both of them are going up price-wise, but internally the previous one is way more smoother, but this one is trickier. This one is going up, but incremental highs are lesser. So some kind of an ending diagonal kind of a formation shaping up on the daily chart of the energy. Keep an eye on Reliance, keep an eye on ONGC and the OMCs. Will it make sense to chase? We can see momentum is improving. It doesn't make sense. Honestly, after such a series of positive readings on the Heiken on the weekly chart, it just doesn't make sense to chase at this price. So some kind of a correction is actually healthy for the index. So energy cautiously bullish. Don't go long. Wait for some signs of slowdown. FMCG, beautiful rally from the breakout that it gave over here. Didn't just turn down, and weekly beautiful. Monthly also holding fine. So nothing much to complain here. Stretched, of course. Wait for dips as in buying opportunity. IT was the pack, and IT is probably going to be a pack of some importance. In the recent correction, we did see banking and IT coming down. We did see banking financials bouncing back, but IT didn't manage to bounce much. In our parlance, we have a short setup. What we look for is momentum. What we look for is trend reversal. What we look for is a pullback, which should be more or less a range contraction. So the daily chart has almost everything that we need for some kind of a short setup. fall below Friday's low can trigger it. We've had a 2-day fall, a meaningful 2 bars on the Heiken, so we can expect some further weakness. I'm not expecting a big fall. I will be surprised if it falls beyond 33,600, if at all it goes to 33,600. And I'm saying so because the monthly charts are exceptionally strong. Pattern traders will definitely enjoy looking at an Adam and Eve double top. Nice, very, very good looking Adam and Eve double top on the CNX IT. So bearish, short-term bearish on the CNX IT at this juncture, only if Friday's low is breached, not at the current juncture. Metal has a very good looking structural divergences on the daily. Again, nothing to say about the weekly, well established. It's the daily which has created an outside bar on Friday. Momentum was slipping, it's still negative. Heiken started to kind of develop the negativity, and then all of a sudden on Friday it creates an outside bar. So this particular bar's low and also this particular bar's high is going to be of some importance on Monday and Tuesday, especially on the downside. So keep an eye on metals, keep an eye on Tata Steel, also Hindalco. View should be cautiously bullish. We have to stick to the trend, but then we might get shorting opportunities if Friday's low is breached. So Tata Steel important. CNX Pharma, what can we say? Nothing actually. I have not been writing too much in our daily prep sheets when it comes to CNX Pharma. Trend up, momentum fine. You have a red HAGB. A red HAGB on the top can lead to signs of reversals, can lead to signs of consolidation and continuation. As I always say, wait for the CNX Pharma to at least cross below Friday's low, and if it closes below Friday's low, then only there is a chance of some slowdown, or else it's not going to happen. It's just going to dip down and bounce back. So Pharma, don't go contra short, stay bullish. If you are not in the game, don't chase at this level, and same goes with real estate. I will reiterate once more, with this double HAGBs on the top with a structural divergence on our charts, we actually were, if you remember, we're actually looking very closely whether the reality will break this this low and stay below this low or not. The formation was pretty impressive, but the price has had something else in mind completely. So Pharma and real estate, very strong, surprises on the upside. Don't chase at this juncture, but definitely do not go contrarian short. So we've got some setup on the CNX IT on the downside. Metal will be interesting on either side of Friday's low, especially on the downside. Same goes for the finance and bank Nifty. Others are fairly placed, and I think that it is going to continue to be a market where it's going to be sector stock specific on either direction, right? So that's the strategy, that's the view on the sectors. Now let's quickly take a look at your questions of the stocks that you have today evening.